This is Rob Roy, and welcome to Elliot Wave Options TradeFinder Live. Welcome. We have a lot to talk about tonight, so let's go ahead and get started. If you're brand new, we have to go through this wonderful disclaimer every week. If you've been with us before, you're aware of it. Hopefully, you've taken a picture of it, read it in your leisure. I will highlight the two main things that the powers that be want us to, which is number one, we are not registered to give individual investment advice in the United States. And when we're talking about prices of option stocks, whatever, it's considered to be US dollars unless denoted otherwise. So those are the things they want you to know. And with that said, again, just it is important. I'm not trying to make light of it. So read it at your leisure. Just don't want to spend any more time tonight on it. As I said, we got an awful lot to talk about. So let's go ahead and start by taking a look at the market. We are very, very close, if you've been with us over the past several weeks, to that 347 level. Obviously, I'll go ahead and draw the zigzag back on the screen for you. But in the meantime, we had the outlook. I've talked about this numerous times as well. We did the Elliot Wave outlook for 2020 back in January, pre-COVID, everything else, where we had three other Elliot Wave patterns giving us 346, and then this newest zigzag pattern here that gave us 347. So four different Elliot Wave patterns, all within a point of each other. And as I said, we're within a whisker of hitting that level. The interesting thing is going to be, what does the market do once we hit that level? What do you think is going to do? Are you prepared? How are you adjusting your portfolio? It's something to consider, especially as we approach the election. But look how amazingly the market has just moved up in that 45-degree angle that I've talked about, that I prefer so often. But we need to take a look at the DMI. If you're new, let me give you a quick rundown of what we do. We start off by looking at the market as we're doing. Then we'll go through and do some looking at our website for any case studies that we may have closed from the previous week. Then we will take a look at case study considerations that we found during TradeFinder and see how those are performing as of this point in time, knock on wood. With I don't know how many weeks we've been doing this. It's months that we've been doing this. We've yet to have a losing trade. So that's pretty phenomenal in anybody's book, I would think. So we'll see how that's going. Then we will look for some new case study considerations in tonight. The charts have already been updated. And then for whatever time is left, I'll answer questions. So I see some questions popping in. Support is on this evening with us as well. They're always right on top of answering your questions. So if you have them, please ask them. If they feel like it's something that I should answer live in the class, they will denote it that way, and I'll try to get to it. Please understand that there's a certain amount of time allotted, and there's no specific reason if I didn't answer your question. It's not that it wasn't a good question, etc. It's just that we have a limited amount of time, and try to be respectful of everybody's time. I mean, that's the one thing that we all have a limited supply of, is time. So I want to be respectful of that. So that's the process. That's how things go. So again, if you're new, feel free to ask your questions. Don't wait until the end. Go ahead and ask them, and then whatever time's left, I'll go through and you get the number of ones that we can, but I will not be answering them as I go through the first part of the presentation, is my point. So I don't want you to think I was ignoring you. So here's the 100% extension here on the C wave. For those of you that may not have seen this 50 times already, but we've shown it in every one of the videos we've been talking about, and gosh, we're almost there. So now we look at the DMI to see, are we running into some resistance there? You would think with four different Elliot Wave patterns giving us roughly the same exact price target that that's going to create some resistance, and it may very well. But resistance can be just bumping the head. You bump your head against that resistance point, and the stock maybe bounces down, or the market bounces down a little bit, consolidates, gathers itself, and then takes off on another run. That's what we want to know. Is that what's going to happen? And are we going to take off from here up to the 161.8% level, or is this it? And it will be fascinating to know. But as I mentioned, hopefully you are preparing your portfolio for the fact that we're likely to have some resistance here, and also if we do blow through that, so that you're prepared. So we're kind of approaching, you know, a D-Day type scenario where something is going to happen. So when we look down here at the DMI, one concern is the ADX is above the positive directional indicator. The good thing is the ADX is moving to the upside. That's positive. Another positive is that the positive directional indicator is moving to the upside. There's no question those two things are good. The negative is that you would much prefer that positive directional indicator to be up here to where the ADX is catching up to it. So the buyers are in control. The strength of the trend is catching up to the strength of the buyers, if you will. And when the ADX moves above the positive directional indicator, that's kind of like when the yellow lights start flashing, that beware, the strongest part of the move is over. And as I try to emphasize as well, when we talk about this, it doesn't mean the entire move is over. It means the strongest part of the move is over. The market could still go higher. It still could go up and hit one of these extended levels here. But it means that the strongest part of the move is over. So we'll be watching this ADX very closely along with that positive directional indicator as the market hits that 100% extension to get an idea of where we may go from here. So I know a lot of people have been talking and making comments, especially on the internet, regarding gold and silver. Actually, I had somebody that told me that putting a long position on silver was a big mistake because gold and silver are getting ready to move to the downside. Well, I think that they can move either direction, and I'll show the chart, but I don't see anything that's distinctively negative. So here's the dollar. You know that we came down, we hit that wave 5 extension. It was right in the middle of the tap box. We've been watching these recordings. You saw it, I've shown it to you numerous times. Spot on again as far as coming down and hitting that level. And the market, or in this case the dollar, the security I should say, as happens quite often with Elliot Wave, when it hits a major point of support, resistance, etc., is trying to figure out the next move. So it's consolidating. In this case, it's going sideways. It looks like it's building a flat on this move here. You could certainly, label the ABC here. Let's use it. Let me show you. This is something really cool with the zigzag tool. I've mentioned this before, that the zigzag tool can be used as far as finding flats as well, because you can see, look at the pullback there. So when you see a pullback that goes beyond the 61.8%, and we're talking about the dollar here, with that big move lower, I can re-click it and start it off that low, but you get the point that this pulled back more than 100%. You're not in a zigzag, so the dollar is not in a zigzag pattern to the upside. That's an indication that because the B wave was so strong, you're probably in a flat. And that seems to be what's bearing out. That would have been indicated back here. That's on the 18th of August when the B wave would have broken below where the A was. And so for 1, 2, 3, 4, 5 days, that appears to be the pattern, is that we're in a flat at this point in time. And so let's take a look at the chart of SLV. And I don't ever mind being challenged. It keeps you sharp. But as far as when somebody says this is right for a definitive pullback, then I'm curious as to what are they looking at? What are they seeing that's different from me that is showing this is right for a pullback? To me, it's super right for a breakout pattern, and it's very similar to the pattern that we just closed on NEO, which I'll briefly mention here in a minute when we get into the website. But you can see a beautiful triangle there, and that's why I'm saying it wouldn't surprise me if we broke to the downside, but it wouldn't surprise me if we broke to the upside either, and it's the exact same pattern that we had with NEO that did break to the upside. Patterns are identical. and they're from the same search results as well. So we'll watch this closely. Right now, we're just long. But if we do start to break to the downside and the triangle takes over the pattern, which it will take over the pattern, but if the breakout's to the downside, then we'll just simply adjust and ride the downward move. And the downward move has a lot of room to go down all the way here. If you're a fundamentalist, which we're really not in general terms at Elliot Wave Options, what we like to use fundamentals for is to back up the technicals. So I'm not going to say we don't ever look at them. We do. They're factored into some of the search parameters, but they're not primary. They're secondary. They're support, if you will. So it's nice when we're looking at a technical pattern that is supported by fundamentals. So the fundamentals that we're looking at with gold and silver is what the Federal Reserve has told us, and they've been pretty transparent as far as what they're going to be doing, and they've said that there's likely another round of QE coming in September. Hard to imagine how that is not going to be putting pressure again on the dollar. Now, maybe the dollar weathers the storm and we kind of go sideways from here. The metals don't look like that. The metals look like the dollar is getting ready to move and we're going to break one way or the other. And maybe if the Federal Reserve surprises the market, which it would be a surprise because they've pretty much said they're going to be doing some form of QE in September. If they surprise the market, yeah, you could get a spring back in the dollar and that could generate a negative move in silver. But with the expectation that the Federal Reserve is going to, and then anyone that's heard me knows I'm no fan of the Federal Reserve. So I kind of have to stop myself and almost laugh when I say something like the Federal Reserve does what they say they're going to do. Then it's just hard to imagine that being a positive scenario for the dollar. Something else that I wanted to bring up as well, just in the commentary thing, I'll be tweeting about this later. So go on to our YouTube page. You can find all the areas that you can follow us on social media. But the bond auction today was heavily subscribed to, which is a big flip-flop from where we've been. The bid to cover, which is how many people are bidding on each treasury or bond or whatever is being auctioned off on that given day. That's what the bid to cover is. If you're not familiar with what the term means, it basically is a measurement of demand. Has been low, which means that money's likely in the equities market because usually you're going one of two places. Money rotates around and it usually rotates into the equities market, back into the bond market, back and forth. Sometimes it moves into the bond market overnight and then moves back into the equities market during the day. It's fascinating to watch that. That's why people joke on YouTube that I never sleep. Well, I like watching that kind of stuff. And that's going on overnight and just to see what's happening. So I just like the markets. I like following them and watching what's going on. And so I'm aware of these things and it's fascinating, but pay attention to the fact that the bid to cover was so high. So what that means is there was a lot of demand for bonds. So you couple that with the fact that the equities market is moving to a point of resistance. I've made the commentary before that, yeah, we're starting to get those headlines. I got one today on my phone, market new high and all that. But has this been enough, just since the highs back before the COVID stuff started in February? Is that enough time is what I'm trying to say, to bring all of that retail money that's on the sidelines that has missed all this stuff for the smart money to sell into? That's the thing that makes me think more than anything else, honestly, that we could move to an extended C wave and go a little bit higher from here. That's the primary thing in my opinion. And so if you're looking from a technical standpoint, etc., it's not a whole lot to hang your hat on. So being prepared for some sort of a corrective move in the not too distant future is a pretty prudent thing to do. All right, so that's the market. Several things that I want to show you on our website. So let's go ahead and look at the website, and we've closed a number of trades since we visited together again last week. First of all was on CYRX. And you can see that was trade number 237, 145% in 14 days. Isn't that fun? And the interesting thing is that some of the subscribers give me a hard time about this. They question, why would we do this going into an earnings report? And I've said this numerous times as well. And fear moving into earnings reports for two primary reasons. Number one, I've seen more often than not where the earnings report came out and the stock moved in the direction that the technical pattern, the Elliot Wave pattern, had already forecast. So it moves it that direction. So I've seen that happen. Now, that when I say more often than not, that means that sometimes it didn't happen. But more often than it didn't happen, I've seen it happen. So when you're already putting the percentages above 50-50 in your favor, then that's how you should trade. So I'm not afraid of that. And then the second thing is, if there is a move in the opposite direction because of the earnings, which granted could very well happen, you take that into consideration when you're placing the trade that you're putting on so that you can adjust. So here was CYRX. Here was the entry on August 6th. And I want to show, before we get into the chart of the pattern, I want to show this. I've been talking about this quite a bit lately because it's important. When you're trading and you have your account and it's money in your account, you get emotional, especially when you have a number of option positions on that are reflecting a loss. It's difficult. You have to have a strong stomach to be a trader. That's why so many traders aren't successful, is they don't have the patience, if they're trading technical patterns, to let the pattern come to them. They panic when a position goes down, and look, this was at a 58% loss at one point in time, very quickly after the entry. And people just struggle with that. And then look what happened. How upset would you have been if you closed out at a 58% loss when you missed out on a 145% gain if you just hung in there a few more days? That's the thing that experience teaches you, is have the patience, let the pattern come to you. Now, if the pattern changes, we know things don't go in a straight line. So the pattern can still be intact. The overall pattern can still be intact, even though the trade itself might be going a little bit against you for a while. That's fine. The stock may be moving the other way, but still in the overall pattern. Things don't go straight up or straight down, and they don't go straight to your target price in any technical pattern. So have the patience to let the trade come to you. So I wanted to show you that. A 58% loss up to 145% gain in a matter of a few days. So here was the pattern that we looked at when we were entering this. It had a wave 3. The wave 4 pulled back exactly to that fib 23.6% level. And it also hit the fuchsia line, which is the 30-day moving average, which a lot of people watch, which is why it's on my screen. So we came down, we bounced off the 30-day moving average. We're above the 10-day moving average. 10's above the 30, 30's above the 50. All the things that you probably saw in our trade scan series. Got a new one that I'm going to share with you here in a minute, so stay tuned for that. But the 45-degree angle up to our price target, everything looked great. And yes, there was an earnings report coming, and that really seemed to trouble a lot of people. Well, on the 13th, following the earnings report, the stock did move to the downside just a bit. It didn't even make it to the 38% fib level. It just made it down to the 50-day moving average. So it bounced off that 30-day, as you can see, and then we came down to the 50-day moving average. We bounced off of it one day. We bounced off of it and closed higher the second day. So that's when you're thinking, okay, we just needed to test that 50-day moving average and use the earnings report to do that. Nothing has changed as far as the Elliott Wave pattern, where the wave 5 target is. You can see target price remains the same. So when you see that, what we did was we added another call. So we dollar cost averaged the cost of the position down. You didn't have to. I mean, we didn't need to do that. But as you can see, it was $2.80 per contract on the entry. The new one was $1.20. So adding that in with the 3, you dollar cost average your overall portfolio down, and then we exited as we got the move we were looking for right to the target price. The target price has stayed the same. Now, we weren't necessarily expecting to see that all happen in one day. I mean, that was awesome that it did that. And you could say, well, you could have held it a little bit longer. Valid point. Brings me to the next thing that I wanted to share with you. On our website, in addition to having all the trade listing, there's commentary. So let me show you a couple things here. First, on the trade list, we're not going to focus too much on this one because there's another one that I want to show you, but here's NEO. This is one that we closed today, which was a 42% gain in 21 days. But I felt like this one, you see, we moved up a little bit, then we moved down, and then we moved up and made a profit as we hit our target. So, you know, do you have to trade with an iron stomach? No, you just have to have the patience and trust in your system. So what I wanted to share with you is the fact that not only do we have all of these trades, but you can come over here and under updates, you can go down and click, there's the video updates that we do on the strategies, but also from time to time, we'll do just a written commentary on something that I feel is important for our subscribers to know. Is in between doing the video updates, etc. But it's more communication. So that's what we like to do, and I think we really pride ourselves at Elliot Wave Options on communication, from just emailing support or texting support if you have a support question. Support refers questions to me. They feel like a question needs to come to me, and we're as transparent as you can possibly be on the website. We post videos of the different strategies, etc. But you look at this chart and you're like, well, what are we looking at? Okay, now here is a 3-minute chart of NEO that I like to look at. Now go back for a couple days. Down at the bottom is the implied volatility. Okay, now you can see, we're moving around and doing a few little things. Not a whole heck of a lot going on. Volatility is staying pretty low, bouncing around a little bit. Look what happened today. So the stock takes off to the upside today, and look what happens to the implied volatility. That's part of the pricing of options. That's where the education comes in. You have to understand this if you're going to trade options. You need to know what the components of an options price are, not just the strike and the corresponding option price to the strike. What comprises that option price? How do they come up with it? What components are there? Why do some seem more expensive than others? You got to know all that stuff if you want to be a successful trader. So that's what we want to share with our subscribers. We want to educate them. And so when you see a move like this, then the first question is, well, is that it? Is that a point to get out? Well, when you have a big move and the volatility follows it, that's extra premium going into the options. So with this scenario, even if NEO, which we did exit today at the 42% gain, if the stock continues higher, but not, kind of more like this, where you can see it, rose a little bit and then leveled off, not a whole lot going on. But if it rises higher, but not as vertical as it did today, and you don't get the volatility spike, literally the stock could go higher and the value of the options go down. That drives people nuts when they see that. And that's where you hear all the, it's rigged. No, it's understanding how it works and understanding the components of options pricing. And so that's why there are times when we may go ahead and close a position out before the actual target price is hit, because that question comes up all the time. You didn't hit your target. Why did you get out? Because there's other things to factor into the equation. And one of them is if you get a big spike, like we did on CYRX that day, on the exit, when you get a big spike like that, the volatility spikes, so you're getting extra free money. That's the way I view it. It's free money because you had a big update. Go ahead and take that and move on and be happy. And if the stock goes higher and you could have made a little bit more, great. But a lot of times the stock will go higher and you're like, what? How come the options, they didn't go up? In fact, they actually gone down a little bit. That's why. So the other one that I wanted to share with you is our second back-to-back. We had 2 consecutive better than 100% gainers. This one was on Alibaba. And what I wanted to show you here was another adjustment. Here we go with the dot plot again, the mark to market. Okay, so day one, okay, and then we wallowed down here, losing all the way down to 68% loss at one point in time, and then boom, 120+% gain when the stock turns around and does what you expect it to do. So the original entry, all this stuff, the subscribers get all this stuff. The commentary, everything I showed you is all for our subscribers. So we communicate with you, we talk to you. We are not just an alert service. So here's Alibaba, another very strong DMI, very good looking. Now, in fairness, it's a little bit overbought, isn't it? So you're like, you know, one of the things you always talk about is no security in any time frame gets very far away from the 10-day moving average. You're putting this on now, there's a little separation there. Fair enough, good point. That's why do a spread instead of straight calls. Because if that gap were to get filled and the stock were to pull back a little bit, then we can close off the short calls. So they're there as protection. And if the stock were to back up, which it very well could have, being a tiny bit overbought, then you can take the short calls off. They did their job. They act as protection, and then let the stock run if the chart shows you that's what's going to happen. The DMI was too strong to just ignore this and wait, because you had we pulled back on this bar, and then the next day we kind of went sideways, and look at that doji. So you're like, are we ready to go? Well, maybe. We don't want to miss that if that's what was going to occur. So there was the trade. It was a, look at that 30-point wide call spread. But with Alibaba, because it moves, options are there. So even with the spread, it was 475 to get in. So now let's take a look at what happened a few days later. We held in that area. So it did kind of pull back a little bit from that doji bar. In fact, the next day was a pretty sizable move back. And then we just went sideways for a bit. So it became very evident that we were holding that area right there at the wave 4 correction, another one right at the 23.6% level. A lot of these have held, even though Elliott prefers 38. You gotta watch what's going on, and that's where you give yourself the flexibility based on the options trade that you put on. And there's a 30-day moving average. We hit it, we moved up, and then we had a nice move to the upside. It's like, okay, we've held the support. We look ready to go up. Same thing here. The target price hasn't changed. We still have 290 as our target price area for Alibaba. So in this case, what we did was we bought back the short 320 call. So we bought that back, and then over here it tells you, okay, now what do you have? So the way our screen works is the alert is here. What are we doing? Okay, now what's left? Where are we after today's alert? And so we just have the 290 call left. So we're only long. Now we don't have the spread, which means that if the stock were to make a significant move higher, we don't have the short call slowing us down or acting as an anchor or a rope with somebody holding you back. There's nothing to hold it back. It can run, and that's exactly what happened. And Alibaba exploded to the upside. Same thing that happened with CYRX. Same thing that happened with NEO today. Big vertical move to the upside. Now you can see we're overbought again, more overbought this time, but we hit our price target. So we're right there. It's time to take the gain. And so we had 220+% gainers back to back. Then we had NEO, the third in a row with 42% gain. So we've been on a pretty nice roll in the Impulse portfolio. So I wanted to share those things with you. If you want to learn more about this stuff, I want to go ahead and share this link with you real quick. It's our Trading Innovations webinars. And here's the webpage. Ask the guys to put it in the chat box. So you should be able to see that link in your chat box so that you can click on it and you'll see the same screen I do with another picture. My picture's everywhere here. It's the weirdest thing ever. But here where you can register, you just click there to register and give your name, email address, and you're registered. And that's all you have to do. And so you can see that the clock is ticking down. So we wanted to go ahead and invite everybody here to join with us in the trading innovations, and be able to see two presentations that go through in depth our strategies and portfolios. There's just more education that we're providing. So go ahead, click there, the blue bar, register for immediate access, and join us in the Trading Innovations web series, where you learn more about the things that I've just explained to you. If you found that interesting and like to learn more about it, that's one of the places to do it. So I'd love to have you come along with us. All right, so let's take a look at last week's case study consideration. It was on Texas Instruments. So here we were. This is what we were looking at last week. There's the DMI. It was pretty good. We picked this one, or I picked this one. Sometimes I let you guys do it, and sometimes I say, no, this is the one we want to do, because this was the best looking DMI confirming indicator. And so we closed at 139, and today we closed at 141, so up a couple dollars since last week, so moving in the right direction. If you look at the DMI, the ADX is still moving up. That's good. Remember when I was talking about the market and how you would rather have the ADX in between the two directional indicators? This is what I'm talking about. If the market looked like this, I would feel more confident that we were going to go up to that extended level. Maybe we still will, but we're going to need that positive directional indicator in order to have enough momentum to break the resistance that we're about to hit with our forecast that we did 8 months ago. I mean, I pat myself on the back for that, and all of us at Elliot Wave Options that helped put that presentation together 8 months ago. In the same time frame, even with COVID, how do you just shake your head? We're about to hit those levels. But now what? Where do we go from here? We'll be sharing that with our subscribers. Love to have you become a subscriber with us. By the way, if you're not aware, we don't ask for a contract. You don't have to subscribe for 12 months. You don't even have to sign anything. It's month to month. You just go in, try us for a month, see what happens. Maybe you have a month like we're having in August, which is a fantastic month. And I mean, just in the last week, you paid for 6 months of a subscription. Anyway, this is a good time. The reason I'm bringing that up is this is a good time to consider becoming a subscriber, since we are nearing such a major point of support and resistance, and it might be nice to have a little experienced guidance on what happens from here. We'll be on top of it. I promise you that. So that's where things are now. Now let's go ahead and look. And by the way, as a subscriber to Elliot Wave Options, and if you utilize ProfitSource, you can ask the guys, the support guys. They can give you more information on that if you're interested in the software that you see me using. The Elliot Wave Options scans, my scans, they have been good enough to put those in there. And so you can see that we have impulse stocks right here. Now what I want to do, there's 7 directional stocks. So let's stay directional for now. Notice that if you've been watching us for the last several weeks, we've gone from 300 consolidating stocks to 35. Now 300 was just, that was an astronomical number, and then it started backing off, and we've been 200, 100. Now we're down to 35. So that's telling you, yeah, the move is, that move has probably happened. The indecision stuff is not so prevalent in the market anymore. Another one of those yellow flashing warning signs. Be careful with whatever you're doing right now. Be careful. But what we can do here is we can take our results from our indicators and put them on the Elliott Wave directional pattern, which is kind of what we do anyway. This just gives you the opportunity to do it in a faster basis and see if there's anything that shows up in these searches that would give us something to look at. And usually we get the results by now, so there may not be. So we'll just go back to looking at impulse. Well, there we go. I know those are the impulse ones because I didn't click this. All right, so here's the ones that we'll look at for tonight. I was trying to see if we could find another one of those the Neos. that had the triangle pattern that broke to the upside. It worked out so well. Cheesecake Factory, from what I've heard, they're not doing well in all of this mess. But I know that everybody saw the next one in line. You're going to want to look at that one, and so do I. But let's do Cheesecake Factory first. Pretty nice, just for those of you that like old school technical analysis. Nice looking trend. Put the Elliot Wave pattern on there. Wave 4 corrected 74%. So Elliot says that's a no-no. We've disqualified this pattern. So regardless, even though we can, and this is where discipline comes in. It doesn't mean we don't miss one here and there. We do. You can look at this and say, all right, well, you know, the DMI looks okay. It doesn't look fantastic, but it looks okay. And you've got a nice uptrend here. Why wouldn't you move to the upside? We do have a doji today. But the Elliott Wave pattern negates it. We need everything. We need the results from the confirming indicators, and we need the Elliott Wave pattern. So if we don't have both of those, then okay, we're done. Actually, what I wanted to do, I made a mistake here. I meant to click on consolidating stocks and wait for buys. So we'll still do that. That was my mistake. So I bet there are results. So let's take a look at, this may be foretelling though that we may not find anything that covers everything. We'll see. Texas Instruments is still on there, so that's good. Look, I always like to look at the ones that people are familiar with. Look at this list. This is actually a really good list. You may see some of these for you, those of you that are subscribers, coming out in alerts. Booking, that's the one, the old price line that you want to see. ULTA has been in the past a very hot stock. Cracker Barrel, everybody knows those. Texas Instruments, we already are following that one. SIVB Financial Group, interesting that they have worked their way in there. Very interesting with the fact that the bid to cover was so high on the bond market today. That would make me really nervous about, because that just pushes rates down. Remember, as prices go up, yields and rates go down in the bond treasury world. Makes it harder for them to make money. And then PayPal, which has been, so let's get moving here so I still have time for questions, because there's some ones that are quite interesting here. We may not have a chance to look at the other search, so I can still have questions. There's a lot of them that I want to look at. So let's take some of this other stuff off. Oh, wow. Elliott Wave, the Wave 4 pulled back 51%. That's pretty darn good. That looks suspiciously like a zigzag. Oh, man. We're almost to the target, though. The target's right where the previous 3 is. So the question again becomes, as with the market, does that break up to the new target? It's pretty hard. You've heard me talk about using Star Trek with the tractor beam analogy for a stock to be trading at 1850 and not just go on up to 2000. I know it did it before. It did it before at the end of the year. But is it not going to turn around and go do that again? Maybe not, but it would be difficult to fathom that. But the DMI looks really good. Notice how much separation there is between the two directional indicators. The ADX is, after going sideways for a couple weeks there, it looks like, in the beginning of August, now is catching wind and showing that that move does have some strength to it. It would certainly give you some cause to think that, all right, we are going to have an extended C wave, break that 100% and go to 138.2. That could even be one of the out of the money butterfly scenarios that we talk about, because this is so liquid. Let me take a quick look at the options. I mean, this is kind of a waste of time, actually, because I know that the liquidity is off the charts here, so I'm not going to have a problem there. Actually, it's not. Not as liquid as I thought. Out of money butterfly is not going to work. And in fact, you're kind of on your own. Wow, that's shocking to me. Well, you'd have to pick and choose, because there's a few in there that are tradable, but not many. That's fascinating to me. I would have never thought that. All right, so forget that. So let's go back and look at ULTA. Not as good on the DMI, is it? I mean, it's okay. We had a little spike there in selling pressure. The wave 4 is right at the Fib 61% level, and then there's another flat right there. So again, here, let me show you. So here, boom, 95%. So it went past 61.8, went to 70. You're in a flat. So it came all the way down to there. So even though it's the zigzag tool, you can utilize it for calculating flats too. So it's kind of a multi-purpose tool. It's really neat. All right, so there's your flat, and now we're trying to bounce from there. I think I would want to see another day or two of this. And what I'm looking for here, just to be clear, is more separation. The ADX, yeah, it's turning back between the two, but it was. And it was looking okay, and then they came together, gave that kind of the kiss thing that I talked about, where they moved together and then spread apart. Just even though I love the wave 4 at 61%, the complex wave 5 with the flats okay, all that looks okay. The DMI looks okay. It just looks okay. You know, I think we can find something that looks really good rather than okay. Does that make sense? So let's take a look at something else. Cracker Barrel. I don't know what the options are. I've never traded this. Everybody knows these. If you've traveled anywhere, you've seen them on the side of the highway. Another 54%. That's actually a pretty nice looking little move there, and the DMI is better. Still love to see these continue to separate, but so the ADX is curling back to the upside, but there must be some reason that I really haven't traded this. Yeah. It's pretty thinly traded, but it's as much as booking, which again still blows me away. So let's go back to Texas Instruments. We don't need to look at that. This one, I'm just curious. It had a nice move today, but even with that, this is where the fundamentals, you want the fundamentals to back you. You don't necessarily trade on fundamentals, but you want them to be supportive, and I just can't see it. I don't know what they do. I'm just going by their name, financial group, that they're in the financial world somewhere and probably exposed to bonds and treasuries. Just nothing there that excites me, and this looks like, hey, we're testing these highs. These are highs from a long time ago. The odds of breaking through there, I think, are slim. You could put this on the watch list. You know, we talk about that, having a watch list each week, and if we broke above 260, then come back and take a look at it. But as far as today, not really a big fan. Let's see what PayPal looks like. Yeah, I was hoping that the DMI would be a little stronger. It had a little dip. It's trying to come back, but note that here's the things. There's a bit of divergence here, because you can see that the stock has had a nice run the past 2 weeks, but the ADX has been yawning the whole time. Not really too excited about that move. Even though we are in a wave 3, if we could get that positive directional indicator, this would be another watch list one. I would just want to see another day or two, even though today was a nice move, 279, but you're at that tractor beam thing from Star Trek. You're at 200 now, and had a little trouble there since the beginning of the month. You went up there, bounced back down, came back out, a little bit of an ascending triangle there. So I would want to see that positive directional indicator wake up, and maybe it will take breaking above this closing high, which was on the 6th of August. The closing high was 204. So you'd want to close above 205. So if you want to make a note on your watch list, I mean, that's how you do it. You know, don't just write down the stock because then you might forget what you were looking at. So on your watch list, you put down the specifics. Okay, you're looking at PayPal, PYPL, interested if the close above 205. And that's how you go through your process each day of trying to identify potential trades for that day. You look at your watch list, you look at the new results, etc. And if it doesn't follow along with that, it saves you time. Otherwise, you're re-looking at it and then re-analyzing every single day. That doesn't make any sense to do that. So, all right. Well, the best one was booking with super thin options. Frustrating. But people will question this sometimes when I say the option side of things is as important as the technical side of things. The options analysis is, you know, you're going to pay a pretty decent spread. We'll see how the spreads come together tomorrow. I'm just really surprised there isn't more liquidity here. We are, see, it just feels like it wants to go back up there and retest these highs. It seems to be heading that way. So let's make a note to follow that one. Yeah, just that's really the best one of the group. So BKNG. Let's take a quick look at Google, since that one's been showing up. Yeah, you just want, when you have these big up days like this, and it may sound trivial or not that important, but when you have a day, the stock's up $20 today, and granted, it's a $1,600 stock, so it's all relative, but man, you really want to see a tick up, because remember, the two directional indicators they're quicker to respond. The ADX is a touch more lagging, but the two directional indicators respond quickly to the movements in the market. So when you have a nice up day like that, you really want this to go along for the ride. Can it continue to do that? Yeah, I mean, the stock can continue to go up and diverge here. It's just when you have that going on, at some point, the divergence wins and you get the reversal. As far as where that could possibly be is anyone's guess, but we're testing that 62% fib level again here. If we could make a meaningful move and have a tick up in the positive directional indicator, I mean, if you've been following it, then you're like, okay, who cares about what you're saying? The stock's been moving up and I've made money. And I know somebody has because they got a message about it. But, you know, I'm really happy for you. But let's let this go just a little bit longer and then see if we can get that positive directional indicator to follow along. So I've got a few minutes left here. Let's see if I can get to some questions. There's one on Google. Kel, I hope you traded that. Good question. Netflix again. Comments is it look like they've started a new wave to the upside. Is that you're talking about this part of the move here, I assume? Yeah, I just the ADX is not impressed at this point in time. I would need to see for Netflix to be a consideration. I would need to see that ADX turn back up. Right now, the ADX, with the ADX diving down like that, that goes into our consolidation stuff. which is in the volatility portfolio. So it's, you know, you've got a little bit, not a really well-formed one. I don't even know what this would look like, but you've got a little bit here of a descending triangle formation. It's crude. It's not the best, but that's what's going on when the ADX is diving like that. It's consolidating. So you know, if you wanted to be super aggressive and try to trade that to the upside, just understand that you're trading that on something other than what I look at. And then the other one was AMD. Which has been on a tear. So we went through some consolidation. There we got overbought, came back down, handled that. We're back up to that recent high. We got overbought by the DMI. See, here's a good example of it. So we had this big run here, and then the DMI was like, oh, yeah, we're the strongest part of the move. At least that part of it was over. There was your signal. That's the ADX moving outside. That's what I was talking about earlier. So this is a great illustration of it. And then we pull back. And that's what the DMI tells you when it's showing that the strongest part of the move is over. Now, that doesn't mean it can't gather itself, which is try to do throughout the month of August here, and then take another run. So it was up roughly 4% today. The ADX is starting to curl back. For me personally, I look at this as, okay, it's in that 85 range. I think we talked about this before when we looked at it, that it's 90-something% of stocks that when they make it to 85, they go to 100. So it's pretty difficult to believe if there's any strength left in the market itself that doesn't make it up to 100. So that's compelling. I would want to see that positive directional indicator continue up. So for me, I'd want another day or two. But looks like that one could be. That one looks a lot better than Netflix to me. Brad talking about SLV. Remember that when you see this 4 here, that does not mean it's in a wave 4. This is telling you that if it's in a wave 4, that's the forecasted move. Right now, we are in a complex 3. So we've had a run in the 3, and then we're going through this triangular formation, and the ADX is resting a bit. So that corresponds with this consolidation that's going through. It will label. If it moves enough to confirm that it's in a wave 4, it will label it. You'll get a circular 4 to show that it is. So right now we're in a complex 3. We're not in a 4. But it could get that way. So anytime, just so you understand the software, anytime you have this forecast, it says, okay, if we're in a wave 4, and I clicked off SLV, I didn't mean to click on that button, but anytime you have this forecast, this actually works out because it's a different chart. A forecasted 4, this is then going to give you the corresponding 5. So this is telling you what this is showing, and this is forecasting that if we're in the wave 4 now, and we have a wave 4 correction, and we correct down here, then that's the likely target. If this continues higher, then that stuff changes. And that's the beauty of Elliot Wave, right there. It changes and adapts with what's going on in the market. And if you're not willing to change and adapt with what's going on in the market, you are not going to be a successful trader, and you're not going to be trading at all for very long. That's been the biggest thing that I can share with people from my experience is you've got to be flexible, you got to be willing to adapt, you have to be willing to adjust. Those are the things that all good traders are good at doing. Question, do we use the 127% fib level? I'm not even really aware of 127% fib level. and look at 100, then 138.2, then 161.8. So for me, I just stay with the primary fib levels of 38.2, 61.8, 100, 138.2, 161.8, etc. Ray, you can use the DMI for day trading. If you wanted to be a day trader, that's one thing that it works well for. I would say that if you're a day trader, if you're trading short term, first of all, be careful. But if you're doing that, back that up with the CCI. I would encourage you, if you wanted to be a day trader, you can use the DMI. Remember, it's a touch more of a lagging indicator. It would be better for like 2 or 3 days with the DMI. CCI is really good if you want to be a day trader. So if you're wanting to day trade, whatever, my encouragement would be get really good at the CCI. We went through a whole session of it on the TradeScan series, an entire webinar on just the CCI. And so I would strongly encourage you to learn that indicator inside and out. It'll help you immensely on day trading. As far as commentary on huge moves in gold, I mean, I can certainly see scenarios where the Federal Reserve pushes the envelope too far. I can't understand why we haven't so far at this point in time. The world still views the dollar as the default currency. It's the only thing that's held it in there. If they do another round of QE in September, I'm really anxious to see what that does to the dollar and if it can hang in there or begin to go through a collapse. But the Federal Reserve shorts gold, so it would take a collapse of the dollar to get gold to some of the prices that people are out there talking about. It would. That would have to happen. And up till this point, unless other countries banded together and decided that they were going to unseat the dollar as the default currency or the currency of last resort, if you will, I just don't see that kind of a collapse happening in the dollar. So I do think silver and gold go higher. I think the dollar goes lower, but at this point, I don't see the collapse yet, but it could. It's certainly something to keep in the back of your mind. I mentioned it before, and I hate this game where they're tempting fate with it. Why are we doing it? It's not necessary. BA, a triangle from last week. Let's take a look. Look at stuff that we looked at Boeing. And it's still in that big old huge triangle, isn't it? Yeah, isn't the ADX is starting to kick up, so it's might be saying something's getting ready to happen. So if you're going to trade the triangle, remember you're supposed to turn the Elliot Wave off. I'm just always curious to see though. That is a big, massive triangle. Here's one thing, and I've mentioned this before, and we'll finish with this. And I know there's a bunch of questions, and I'm glad you guys are so interactive, but we're out of time, and so I apologize for not getting any questions. But this is a point that I want to leave you with. I have mentioned this before. I've never seen a market with as fast a rotation as this has. Markets do that. When the liquidity and the Federal Reserve, they've pulled back on some of their liquidity injections, and we've seen that. And even though the market's marching higher, it's not doing it in massive clips like it once was. The market, when money rotates in the market, it's looking for things that haven't participated. So when you see something like this in Boeing, where we've gone dead sideways there, there's the ABCs, by the way. And you can see all those ABCs that are there. And then you look at the market and you see two totally different things going on here. This big, nice 45-degree angle trending move. And then you see Boeing just blah. that's something that the big money players, where the rotation comes from, that would be looking at to try to say, okay, here's something that can play catch up. Now, we all know the issues Boeing has, et cetera, and we all know that people aren't flying right now. All you gotta do is just take a drive to the airport. It's like a freaking ghost town. It's unbelievable. Even Orlando's airport, that's usually just insane with people coming and going to the attractions, et cetera. There's nobody in line. It's security. It's fascinating. But anyway, back to the point is that would be something that I would find interesting. I think that you have a pretty quick stop. Your stop is right there at that 160 low there. And as long as we hold above that, you could throw caution to the wind. This would be in your high risk portfolio, money that you're like, this is play money. If I lose it, I don't care. And all option trading should include money that you're not afraid to lose. This is not, you don't trade with money that you need to pay your bills with. But as far as just a super speculative position, that's where that becomes interesting to me. It's too expensive. I think we looked at the trying to put a strangle on it. It was too expensive. But if you wanted to trade it long based on that scenario, you could. But wow, it's a shame. It's really good as far as the triangle. Look one more time, then we'll wrap it up. Just want to see if it's still too expensive. November, super liquid. Yeah, I mean, it's just, to get any sort of a decent delta, it's just too expensive. And I don't mind going, and our subscribers know this, and we talk about it a lot, that I don't mind going down the delta curve a little bit for some of the higher dollar stocks, but holy cow, they're just $180 stocks, not that expensive in this day and age. And those options are just, they're really inflated, which may mean something's about to happen. When they pump the volatility in, they're expecting something to happen. Anyway, thanks for your attention this evening. Appreciate it. Hope you found that informative. As always, look forward to talking to you again next week. Take care, everybody.